Again, it's this very kind of back and forth tactical picture. It doesn't feel like a huge rush of money of people who want to actually own things for a long period of time, although really pretty good reversals, from the lows. If you look at the ETF volumes and a lot of the idea that people felt like maybe that was enough for now on the downside.
Josh, you often look to the charts and the technical analysis. How much damage is done and what does it suggest about where we're going?
Yeah, I think that's like a really key point for people that are paying close attention to this stuff is like, how much worse can it get, or has it gotten bad enough? And the answer right now is not market-wide. It's segment or sector specific. And I'll give you an example of what I mean by that. You had a very impressive intraday reversal overall for the S&P, right? That's obvious. And you did have a pretty good washout leading up to that, even though the S&P really only fell about 5%, but internally, 75% of the S&P 500 names were below their 50-day. So on a short-term basis, that is the highest number of stocks that we've seen below the 50-day since 2020. So, like, it's decent. The NDX is much worse. NASDAQ fell 8.3%, peak to trough. Mega cap tech is trying to bounce here. Apple was 12% off its highs at the worst. It's not up much, but it's way off the lows. Google and Microsoft are bouncing much harder. Those are the two that look best. Netflix is acting like it's on another planet. New highs again today, completely impervious. And then the whole ARK complex. There's really no bottom there. So it's very tough to give you like a black and white. Yeah, that was the correction, and this is the bounce. I don't think it's over yet. And I do think it's going to roll through a variety of industries before we get there.
NASDAQ's about 6% now off the highs.